Hey everybody, welcome to another episode of Blockchain Central. Today we're diving right into the world of Ripple. First of all, please note that the content does neither represent financial, legal, or tax advice, nor is it supposed to be understood or interpreted as solicitation to buy or sell any securities, coins, or tokens. Today I want to talk about Ripple. Ripple gained much attention last year, with the market valuation reaching $120 billion early in 2018. At the moment, Ripple is the third biggest cryptocurrency right after Bitcoin and Ethereum. What is special about Ripple and why is it so unique compared to the other cryptocurrencies? First of all, Ripple is a back-end infrastructure and is not a consumer-facing product. This means that Ripple is actually working with big banks instead of trying to replace them. This is how they have already attracted many partners, including large banks such as Santander and payment providers such as American Express, all working on prototype services that will also use Ripple Network. Ripple tries to revolutionize the way banks and large financial intermediaries conduct transactions. While it is possible to instantly send messages and information across international borders, conventional money transfers will take 2 to 4 days to settle. Imagine the following scenario. You want to send 50 euros to your college friend in Singapore. Therefore, you deposit 50 euros at your German bank. In order to conduct the transaction, your German bank needs to hold a so-called Nostros account denominated in a foreign currency at a foreign bank, to send to your friend's bank in Singapore to conduct the transaction. This account is denominated in the local Singapore dollar and needs to stay liquid at all times. The Singapore bank can credit the Nostros account and debit the transaction in your friend's account. If the two banks are not directly linked with the Nostros account, the transaction needs to be routed through different banks to eventually arrive to your friend's account. This system is very complicated and takes quite some time for a transaction to settle. Another problem with the described conventional transaction system is the counterparty risk. Having money in Nostros accounts at a foreign bank exposes your domestic bank to the foreign bank's default risk. If the foreign bank goes bankrupt due to an unforeseen crisis, it is very likely that your domestic bank also loses the money in the Nostros account. Now let me explain how Ripple tries to solve these problems. Ripple is a distributed real-time payment protocol for anything of value, and it works through the transfer of IOUs. IOUs are debt obligations between two parties and can have an inherent value in a trustworthy environment. The entire Ripple system can also be compared to Hawala, an informal value transfer system used across the Muslim world. Let me make an example. You want to send 50 euros to your friend in Singapore again. In order to do so, you contact your trusted Hawala agent and deposit 50 euros with him. The agent tells you that your friend can pick up the 50 euros at his trusted agent in Singapore if he says the predefined password. Both agents note down the transaction in their personal ledger. The money was transferred in a form of IOUs without a physical movement of actual cash. In order for this to work, both Hawala agents have to trust each other. If that is not the case, the agents can try to build a chain of trusted agents who will then conduct the transaction. This example can also be used to understand how the Ripple network works. The Ripple protocol, IOUs are transferred through so-called gateways instead of agents. The Ripple algorithm tries to find the most time and cost-efficient way between two gateways and conducts the transactions in an electronic and cryptographically verified manner through the Ripple network. Since Ripple is a back-end infrastructure, these gateways are often established banks or financial service providers. Furthermore, all kinds of goods can be transferred via the Ripple network as long as the gateways accept the IOUs of the traded commodity and are able to hand out the traded good. It is also possible to link and use several gateways for one transaction in order to interchange the traded commodities. If the network is not able to establish a trusted chain of gateways, the transactions can also be conducted in the network's cryptocurrency XRP. This currency can be understood as a currency of last resort and is accepted by everyone in the network. So, if a transaction does not find a trustworthy path for the IOUs, the gateways can directly conduct the transactions with XRP tokens, which does not require a trustful relationship of the gateways. In the Hawala system, every agent keeps track of their own ledger. Ripple, on the other hand, uses a distributed public ledger of accounts, balances, and IOUs, which is constantly updated by the Ripple network. Prior to a transaction, network participants select a list of trusted validator nodes. These nodes establish consensus via an individual voting process. The entire settlement process takes about 4 seconds and is less expensive in terms of computing power than any example of Bitcoin's proof of work mechanism, increasing the speed of the entire network. Now you might ask yourself, how to know which node to trust? To solve that problem, the Ripple team currently provides the users with a list of recommended validators. In its current stage, the network can clear up to 1,500 transactions per second, enabling easy scaling. Furthermore, the network is scalable to at least 50,000 transactions per second, which is actually competitive with Visa. The XRP token also has a second function. To protect against false use and spamming, every transaction requires a tiny fee of XRP. This fee will not be received by any miner or node, but will be destroyed after the transaction is conducted. This means that with XRP equivalent of 4 euros, one user can conduct 2 million transactions, giving you a better idea of how small the transaction fee is. Now, if you think the network will eventually run out of transaction fee money, stay calm. Estimating a daily transaction volume similar to the Visa ecosystem, the network is sufficiently funded for the next 2,500 years. Overall, 100 billion XRP tokens exist, which are all pre-mined and are distributed in the following fashion. Number 1, the Ripple team holds 7 billion XRP. Number 2, 39 billion are distributed among network users, investors, and participants. And number 3, 53 billion were transferred to an escrow account from which 1 billion can be drawn every month. This is done to firmly establish a liquid and healthy cryptocurrency whose value is determined by its utility and not driven by speculations. Now, in summary, Ripple is a back-end infrastructure blockchain settlement network for banks and financial institutions whose aim is to improve scalability, speed, and security of the traditional banking system. Transactions are conducted through gateways and mostly IOUs are exchanged in the network. This means that the transactions, which would usually take several days to settle, can be inexpensively conducted in no more than 4 seconds without the physical interchange of the traded good. Furthermore, the network is scalable for a worldwide implementation, attracting large banks and financial service providers as partners. That is it for this episode of Blockchain Central. Let me know in the comments what you think of the potential value of the Ripple network, and as always, make sure you hit the like button if you like this video. And don't forget to subscribe to Blockchain Central to never miss a beat. Happy investing.